Thank you. Thank you for joining me on this recording in your audit class. My name is Angandalo Joseph, and I hope everything is okay. You have a paper and a pen near you. You want to take down some notes as we go through this discussion of an introduction to internal controls. It's an introduction to internal controls. So we shall look at the nature and purpose of internal controls. We shall look at internal control and audit strategy. We shall look at limitations of internal controls. We shall look at components of internal controls, and we shall close with documentation. Of course, I'll introduce something that has to do with the common financial systems within a company. I wanted to start by defining internal controls, and this is simply the safeguards that have been put by those charged with, running company affairs on a day-to-day basis in order to safeguard investments. Now, there's a technical description on your screen. It says internal control is a process designed, implemented, and maintained by those charged with governance, management, and other personnel to provide reasonable assurance about the achievement of the entity's objectives with regard to reliability of financial reporting, effectiveness and efficiency of operations, and compliance with applicable laws and regulations. I say internal controls are simply safeguards that have been put in place by management. Measures put in place by management to preserve investment value. Internal controls are essentially set to fulfill the following reasons. Number one, to safeguard business resources, that is to preserve shareholders' wealth or investment. Internal controls provide a reasonable assurance that the objectives of the business will be met. Now, there is a relationship between your audit strategy and the quality of internal controls that you're going to look at. If tests of control provide evidence that an effective control system is in place, this may allow the auditor to place a degree of reliance on internal controls and evidence generated internally within the entity. That is, if the internal controls are in place. Where there is no effective internal control system, the auditor should respond by increasing procedures conducted at and after the end, because now you can't place much reliance on, internal evidence and the systems of your clients. You need to increase substantive procedures, and this is detailed work on major account, balances. You need to increase the locations to be included within the scope of your audit. Of course, that speaks to the increase in your audit sample so that you can minimize audit risk. You need to place less reliance on analytical procedures, because remember, analytical procedures will be based on the figures that you are given. So if the figures that you're given cannot be relied upon, then you want to use a different method to generate what we call sufficient appropriate audit evidence. Placing less reliance on written representation from management can also be considered if the control environment is generally considered to be weak. Obtaining more evidence from external sources should also be a consideration when the internal controls are weak. External confirmation from customers and suppliers, what we refer to as secularization, can be prioritized. Updating the audit strategy and plan to reflect the additional testing required at the final audit stage should also be considered. That means that you need to, modify your audit strategy to reflect the fact that you are cognizant of the fact that internal controls are strong or weak. Now, internal controls have got their own limitations. One of the limitations of internal controls is the fact that human beings work within a system. So human error in the case of judgment, human beings get overwhelmed and they can make mistakes. Simple processing errors and mistakes, collusion of staff in circumventing the controls where you've got segregation of duties as your control, and this should be there in each firm. If the supervisor and the subordinate agree to override a control, then you see that that control will be less effective. All right, systems are designed for routine or usual business transactions, so that if we introduce what is unusual, the purchase of non-current assets, for instance, the purchase of high-value items, for instance, internal controls may not be, as effective. The abuse of power by those with ultimate controlling responsibility, i.e. management override, just simply overlooking requirements. For instance, every payment needs to be supported by, let's say, source documents. You are not supposed to be in the habit of raising checks without supporting documentation, because that is not good for accountability. But if we override that requirement, because we're in the position of privilege, internal controls will not help us. As a result, so from what we have just said, it is very important that the auditor always performs substantive testing on material balances in the financial statements. Okay, let us look at components of internal controls, and I've got about 5 of these. I've got the control environment, I've got risk assessment process, I've got the information system, I've got control activities, I've got what we call monitoring of controls. Of course, this one I can discuss it. Should be provided by managers. If I don't touch on it, please remember that I could have said management is responsible for providing oversight, supervision or controls. Systems cannot operate on their own. We need somebody to enforce those. So let us begin now from the top there, control environment. This is a framework within which controls operate. Okay, what are we focusing on? The focus largely is on the attitude, awareness, and actions of those responsible for designing, implementing, and monitoring internal controls. All right? And what else do you have? Under control environment, we're effectively speaking to communication and enforcement of integrity and ethical values, especially by senior managers. Remember, the tone must be set from the top. Commitment of senior managers to competence and training, employing, individuals who are going to become part of our team on merit could be included in that one. Participation by those charged with governance, that is, there's supposed to be dialogue between executives and non-executives, directors, so that there could be constructive, criticism on the strategy of those who are called executive directors, to the benefit of the company, of course. The management philosophy and operating style of the company must be sound, and of course, managers must lead by example in terms of even setting what we might call a culture of zero tolerance to corrupt activities. Organization structure, how you structure organization, may help you to minimize, activities of, non-compliance with company policy. Assignment of authority and responsibility, there should be clear reporting lines. All right, all positions must be supervised. Human resource policies and practices, of course, we must be able to identify top talent, quality talent that should help us to steer the company to better, heights, greater heights. Risk assessment process is the responsibility of those charged with governance. Of course, it involves risk identification, It involves risk, analysis, risk, mitigation, as well as risk monitoring. Risk assessment process forms the basis for how management determines the business risks to be managed. Threats to the achievement of ongoing business activities is an example there. You identify those. These processes will vary hugely depending upon the nature, size, and complexity of the business organization. All right, information system. This information system refers to all business process, all the business information systems. Okay, the information system is all of the business processes relevant to financial reporting as well as communication. Under information system, we seek to see how a system can initiate, record, process, and report transactions, maintain accountability for assets, liabilities, as well as equity, resolve incorrect processing of transactions. What happens if we are going to correct, when we are going to correct a transaction, is the undo, transaction accounted for properly? We need also to appreciate process and account for system overrides. If there's a system override, how do we respond to that? We need to be able to know how to transfer information. This is a very important one, from the day books, for instance, to the general ledger, and from the general ledger, extracting a trial balance and coming up with what we call financial statements. All right, control activities. We should have these general activities within a company at least, and they include: number one, authorization simply means giving consent that an event or a transaction must go through. Performance review may involve assessing work done by another person. This could be business between junior and supervisor. Information processing. Okay, so information must be processed in a way that data authentication, data integrity is not compromised. Physical controls, yes, you can restrict access, let's say, to some places, and very much common. Think about the accounts department, which should have restricted access. Segregation of duties. Members of the firm must not begin and complete a transaction lest we be exposed to fraud. So we need also to try to understand systems, and for the auditor, this is a primary responsibility. Your understanding of the system will enable you to fish out key findings. For instance, system understanding can be done through inquiries of management or relevant personnel, observation of the application of controls, that is, watching a control in action, tracing a transaction through the system to understand what happens, what we commonly refer to as an audit trail or walkthrough test, inspection of documents such as internal procedure manuals. You can do all these activities to just get a glimpse, or to just get a grasp, rather, of how your client system operates. So I give you now the system documentation types. How do we document? How do we, document a system, register a system, okay, on our records? So we can use what we call narrative notes, which is a written representation or description of a system. We can use flowcharts, that is a diagrammatical representation of the system. We can use organization chart diagram showing reporting lines, roles, and responsibilities. I'll not dwell on that. Our human resource colleagues, they talk about the organogram. Okay, so this is simply a diagrammatical representation of reporting lines and company hierarchy, so to speak. You can also use what we call internal control questionnaires. It's the list of controls given to the client to say whether or not those controls are in place. Or we can use what we call internal control evaluation questionnaire. Let me just make a correction on that one. I think I left out a T. Okay, let's just correct that one and see if we can proceed from there. All right. The internal control evaluation questionnaire does not ask whether a control is in place or not. The client here is asked what controls are there in place for a given control objective. Okay, so I'm going through these one by one, excluding, of course, what we call the organization graph or chart. I'm starting with narrative notes. As we have already, alluded to this, this is a written description of a financial system. Of course, we have got advantages and disadvantages there, and I've seen several questions where they ask you to discuss the advantages and disadvantages of this. Okay, so narrative notes are easy to record. Almost anybody can do this type of work. They facilitate understanding by audit staff, and they can support what we call flowcharts. The disadvantage, however, is that they're difficult to update unless you have got a computerized narrative notes, or they aim to describe and explain a system rather than to check whether controls, key controls exist or not. We have got what we call diagrammatical description of a system now, what you refer to as flowcharts. And normally these are done by professionals in Excel. You can also do that in Word, but I'd rather do it in Excel. All right, so what are the advantages of a flowchart? It's quick to prepare. That is, avoids the unnecessary detail of writing paragraphs. It is easy to follow for those who are fascinated with art. It shows a complete system, snapshot of a complete system, and it can eliminate extensive narrative. Are there disadvantages? Of course. This type of system documentation is only suitable for standardized system and may not work for systems that keep on changing from time to time. It's good for document flow, not necessarily the check of control. So if you are not experienced in what you're doing, you'll be overlooking important parts of the system. Could be difficult to amend, of course, unless we have got a professional person who was involved in, let's say, coming up with these flowcharts, or somebody who has good experience. And it can be a waste of time if you don't know the key stages of a system. Okay, internal control questionnaires now we hear. This is simply a checklist approach of documenting a system. Advantages here include, of course, quick to prepare. All you have to do is to indicate whether a yes or a no if you ask a question of whether a control exists or not, and can ensure all controls are present. Major controls are present. That is, but the disadvantages include the following: controls may be overstated because the client will always be saying yes, this is in place, and when you turn your back, they will put the control in place when it was not there. Unusual controls are unlikely to be included on a standard questionnaire, and this may result in what we call rote follow through, where you want to assess a business based on a questionnaire that was used for another client, and of course that may not go well because every business has got its own unique qualities. What else do you have? May contain a number of irrelevant controls. Again, that speaks to what I've just said, and so we need to be careful the way we use these tools. Now, in order to address the problems or the weaknesses of the internal control questionnaires, we have what we call the internal control evaluation questionnaires. The client here has to respond with the control they have in place rather than to say a yes or no answer, which should mean controls are less likely to be overstated. So you may ask the question, what control is there for you to prevent unauthorized access to the accounts department? Somebody is going to give you the details rather than to ask, do you lock the office or not? Somebody is going to say, yes, we always do. All right. What are some of the other attributes that we have here? They are quick to prepare these questionnaires, the evaluation questionnaires. Quick to prepare as a list of control objectives can be compiled, and the client is asked what controls they have in place to address. Clients may still overstate controls, as they may say control is in place for the control objective even if it is not there. All right. The checklist may contain control objectives not relevant to the client. Again, this is the danger of having checklists. Where you have unusual risks, objectives may not be easily identifiable, and that will lead to some kind of ineffective audit altogether. Testing the system. So typical methods through which we test the system for its effectiveness, for its existence and effectiveness. We can observe a control in action, we can do inspection, or we can use what we call computer-assisted audit techniques. I will discuss all that in the coming sessions. Now, please take some bit of time to write common accounting systems, and I want to end there for now. This is what we call an introduction to internal controls. Of course, next time when we meet, you, my students, we have to look at a question. But please make sure that you go through this work and write something. Thank you very much.